All right, hello everyone. So let's take a look at gold for a case study, right? Last week, as you know, I was at a conference, so I wasn't around. Let's put some coffee on here. So I wasn't around, so I couldn't really do anything because my whole week was pretty much booked out. But let's do this. Now, this is gold, all right? So let's push this back here. Now remember, we've got the trading days from last week, all right? So last week we understood we needed to go up, and remember I had that target up here, which was the high of there. Okay, this was the target zone last week, and the market was pretty much in there. Whoops, it's pretty much in there, all right? And then Monday we opened up nice and easy. And remember, lately, last week especially, what did I tell you guys? I've been working on the energy potential for the day. So we know the trading days, right? We know when the market is, what day the market's going to make a move. We know the hours during the day the market is highly likely to make those moves. And now we've got a bit of direction. Okay, so if the direction is obviously it's not 100%, right, but it's pretty good, just like the timing and the trading day. So when they all come together, now I can say to myself, wait a minute, this is a trading day, and I've got ahead of me potential energetic days to the upside. Okay, understanding that its potential to the upside will give me the ability to go in that direction, and I know which days should be energetic, right? So as you know, last week, these 3 days were in that way. So I said, going up, just follow it through to the target, just push it up. And that's Friday and that's Monday. So if we take a look at today, right, and if we take a look at my calculations, I said Tuesday, Wednesday, and Thursday also have that potential, right? So how can I really use these new energy days with a direction, okay, that will give us, a good trade with a very high likely success. So here we have gold. All right, as you know, for me, gold's gold. So let's take a look. These are the trading hours. All right, whoops. So let's take a look at that. Let's do this. All right, so here I've got a trading hour. Here I've got trading hours. Here I've got trading hours. Here I've got trading hours. So what's really going to happen here? I've got another one coming. Well, this is it, actually, sorry. This is the last one for today. So as you can see, remember I also did a boxing strategy, right? How to box the bars and match it to time. So if, for example, this was like 7:20, 7:30 my time, and the market came, as you can see, it started going to the upside, was exactly the kind of thing we're expecting at trading hours. So market goes up nice and easy. Now we're here again. Now here it did a bit of a stop sweep, which is fine. Okay, if you got in here on this bar, then you have to anticipate, that your stop loss needs to be somewhere a little bit further down where it made a low, or it could be just below there, okay, or below there. Or if you were too late for it, and most of you are in New York, so most of you are going to be really trading in these hours, because this is New York pre-trade session, which is about 3:30 my time. Okay, so I think there is like 8 hours difference between us. So 3:30 to 3:45, which is 2:30 to 2:45 on the platform, as you can see. And here we've got, as you can see, the trading hours. So two things can happen here, is that the market can sizzle down and then come into these hours to chuck a Yui, or we can break out and go into those hours. Okay, but what do we want to do? What do we do in the technical analysis for today? What we want to do is to come down. So let's get rid of that arrow. So I want to come down into some trading hours and levels where the market can pick up again. So let me get rid of all of those circles. So once you understand you've got trading hours, you have to just sit tight and see where the market is going, and then you can chuck a Yui to the upside, or if it breaks down, you can follow the breakdown to the downside. But remember, our bias for gold is to the upside. So on the daily, where can we go up is a question, and that's going to be on these levels here, where the market can come back for a good buy kiss or close gap. Both are Okay, and on a 15-minute chart, you can box it in. It's the technical analysis situation. So if the market at these hours starts to turn and break to the upside, then you know we're going up into the next hours. And your next hours, those hours are going to be the place where you manage the trade with time and price. Okay, because somewhere at this timeline, okay, we're going to meet with a price. And that price is either going to close gap. Let's take a look at that. Okay, so let's take a look at this gap here. All right. Or it can go up, come back down into the trading hours to go back up again. So those are the options that we have. So what do you have to do now? You just wait. You wait with your setup. You wait for the trading hours. And as we get to those trading hours, let's turn this into a 5-minute chart. Okay, we still have a bit of time for New York, obviously. All right, but this is now a 5-minute chart. Okay, and these are the trading hours coming up. What time? From 12:30 to 1:05. Okay, so we'll see how that pans out. And if it breaks to the upside, you know where we're going, into New York. All right. The other option, what you can do, if you don't want to wait for a breakout at these trading hours, because your bias is to the upside, and the market is going to the upside, as you can see. Okay, we can go up in that direction as well. So you can get in from here with a tight stop loss as well. Okay, which is what I mostly prefer to do rather than a breakout. But if you do a breakout, it's a matter of choice, and it's not wrong. I'm also known for doing breakouts because sometimes I miss the hours and the market goes up and then it comes back into a trading hour and it does a goodbye kiss, and then you can get back in again. So it's an interesting period to watch. So like I said, according to my time, which is UTC +3, it's from 12:30 to 1:05. Keep an eye out for it, see where it goes. If it's going to break to the upside or the downside, this is why knowing the hours is good. If it goes sideways, then you're going to have to do the same setup at the New York session. Okay, this is a stronger hour, by the way. Okay, as you know, I sometimes say, guys, this is a better place to trade because that's the place where the market can like really put its push or drive or turn the market. So in New York, this 330 to 345 is good, and if we find direction here, it should really take us into 720 and then to 830, and we should target 1030. And so we should target 1030. So you can just follow it through. Obviously, knowing the future hours is important. 10:30 on the platform is going to be 9:30 my time, which is going to be there. All right. So once we have a direction, then we can kind of like stabilize ourselves and get in there. Okay. This is also an impulse wave down with a pennant formation. So breaking to the downside is also logical. Why? Because, like I said, want to close in the gap. So because we know the hours, we don't have to rush the trade. You can set up technically. Just technically set your trade up. Wait for the hours to happen. And as those hours happen, market will move. All right. Okay, hope that helps. So this is something for you guys to watch throughout the day and see how it pans out. Okay, I'll be definitely looking out for this time. Also, I'll be looking out for, because Monday was a trading day, okay, I'll be looking out to see if we are down here or lower in the next trading day so that we can follow through as well. If that happens, we'll do another case study on that as well. But like I always say, get your setup done technically, then evaluate your risk return, and then you can enter the trade at the right time with your setup, and that's perfect. Have a good day. This is part 1 of gold. If part 2 comes up, you'll know about it.